Good morning, everybody. It's top of the hour here, so I'm just going to give everybody, we got a number of people that are still in the process of logging in. We'll give them a second here to get live, and then we'll get rolling. I see we've got Amin and Blanca and John and Maylin and Michael. We got Jose and Vince and Karen. Thanks for coming out this morning. Just give this another minute. We'll get going. Okay, so I'm going to get going here to respect your time, and as other people join us, of course, they can always go back and get listen to the replay. Everybody will get an email with a copy of the replay after the event's over. And as always, you can go this afternoon. I'll have this up with the prior webinars on our YouTube channel. So just go to YouTube and search for Sawyer and Latimer CPAs, and you'll see all our prior webinars there. So today we're going to be talking about the Paycheck Protection Flexibility Act, which is something that the Congress passed and the President signed last week. I put the, making sense of a moving target seems to be the way that this entire stimulus and PPP loan scenario has been going since the very beginning. It keeps getting changed, and they keep changing the rules, and they keep finding other things that are going to cause a problem. So we know, of course, that there's still going to be some stuff coming out on this, and we expect to see further guidance. And now that they've got this new Paycheck Protection Flexibility Act, we expect to see a revision of all the forgiveness applications and rules and stuff like that in order to adjust for the new act. So our agenda today is just to, we're going to start with going through the changes that were in the new act, the shift from 8 to 24 weeks, this change in the spending requirements, some new exceptions that are added because of difficulty perhaps in reopening. Also, what we think the effects on your loan usage will be, and on the forgiveness. And then, as I've mentioned, unfortunately, there's a lot of remaining questions that we're concerned about how the government will apply some of these things, how the SBA or the Treasury Department will come out, and again, how the banks are going to read some of this stuff. So let's get going here. So the biggest change, of course, is the shift from being an 8-week covered period to a 24-week covered period. The deadline, I'm going to point out here, the deadline, if you've not applied and received your PPP loan, the deadline to apply for a PPP loan is still June 30th. So there's a few more weeks left in that application, and there's still some money available if you haven't applied and you're looking to get that. The original PPP, of course, allowed for an 8-week covered period, which meant you had to spend the money during the 8-week period after you were funded. The way that this new act reads is that if you had an existing PPP loan, you can choose to either keep your 8-week covered period or use the expanded 24-week period. If you are applying now after the date of the act, you get a 24-week period, and the 8-week period is not an option. So borrowers will have 24 weeks to restore their workforce, hour and wage levels for full forgiveness. So December 31st instead of June 30th are the deadlines for that. We'll talk a little later about whether it's best to stick with the 8 weeks or to go ahead and take a 24-week period. And realistically, I think what was behind the act was the government was getting lobbied pretty hard by particularly the restaurant businesses that have a lot of employees that were looking to use these PPP funds to pay for operations, and those loans that came out that were applied for in April, that they received their loans in May, and 8 weeks is ticking, and in a lot of cases they're not able to either open, or they're not allowed to open at 100%. I think right now we're somewhere around 50% capacity, here, but there's other areas where, most areas where they're not allowing 100% occupancy in these restaurants. So of course they don't need 100% of their employees back. And that was kind of the reason behind that. And then some shortcomings of the original law. I think they were trying to fix some of those things. So spending requirements. So other than the time frame of the 8 to 24 weeks, they have also changed the spending requirement. So originally you had to spend 75% or more on payroll costs, and were allowed to spend up to 25% on non-payroll costs like rent and utilities. That's now changed to 60% for payroll costs, and up to 40% for those other costs. Again, we are seeing most situations where the non-payroll costs are not going to come up to 25% level, but if you've got a big restaurant, your overhead, your rent could be a very high number, and we do have a few instances where the rent is very high and the payroll is very low, and they're struggling to use 75% for payroll costs. So now it's going to be 60%. So you need to use at least 60% for payroll costs. I'm going to point out that the definitions of payroll costs and non-payroll costs remain unchanged. So payroll costs would be gross wages, including bonuses paid to employees, insurance, retirement plan contributions. There are some exceptions for the owners where they're limited. But for the non-payroll costs, of course, would be mortgage payments on your business property, or mortgage interest on your business property, rent, and utilities. The requirement that the bar use that 75%, it's nice to see that reduced to 60, because we've been doing some extraordinary things to try to use 75%. So spending requirements. So here we are: exclusions from payroll costs, owner's health insurance, owner retirement plan contributions, and anybody that's got payroll that's over 100,000 annualized. So if you've got somebody who's making more than $100,000, only that $100,000 annualized amount is going to be included in the amount that can be called payroll costs and be allowable for forgiveness. And then the owner, and this is something that we're just seeing in some of the commentary, that the owner pay really needs to be in line with the 2019 levels. And if you were paying yourself very little and you raise your pay, it's very possible that those may not be includable, and you might not be able to take those as forgivable. So there's some new exceptions. Previous guidance allowed for excluding employees who refuse to return to work. So there's some new exceptions that say, if the COVID-19 related operating restrictions, or due to those restrictions, you're not able to find qualified employees, or you're not being able to restore full business operations to the base date of 2/15, then you can accept those employees. And this really relates to the wage and full-time equivalent measurements that go into determining whether you get full forgiveness. I'm going to point out that these two exceptions are really based on government restriction and not a general decrease in business. So what I mean is that if the government has told you that you're only allowed to have 50% occupancy in your building during your covered period, then you have the ability to now say that, hey, the government restricted me from being 100% open, and I could only bring back 50% of my employees because the government restricted me from doing so. So you shouldn't be hurt by that. If you're allowed to fully open and there's a general decrease in the volume of your business, that is not going to allow you an exception. That, of course, is based on what we're reading in some of the rules that are coming out. That could change. I think the reality is I'm interested to see when SBA and Treasury release a new forgiveness application, how do they show that calculation, and that will tell us a lot more about how this stuff is going to be used. So, and there's not been a new application or any new guidance relating to forgiveness at this point, although they have said that they'll be trying to get that out really soon. I sure hope so. Effects on loan usage. More rent and utilities qualify. Basically you can use, if you figure your 24 days at roughly 4 weeks a year, you get about 6 months of these up to a 40% max. More time to get your business back up and running with matching your full-time equivalent and wages back to the base levels. And I put in here, may not need to pay employee bonuses. So, in our original calculations with clients, we were realizing that perhaps we were not going to spend 25% on non-employee costs, meaning we had to spend more than the original 75% on payroll, and payroll wasn't going to make it. So, in a lot of cases, we were having clients pay some bonuses. They were paying, some hazard pay, if you will, for the employees who were willing to come back and be back at work in a challenging situation. And, that, we were looking at it, this was free money provided by the government, and you can either pay it back or you can use it to help your employees. So we were suggesting that they, within the limits that are allowed, make some extra payments, and hopefully that will, we based what we knew at the time based on what the rules were at the time. Now that they've changed, we're reconsidering some of those, and in a lot of cases we don't need to do the bonuses anymore, because now we got 24 weeks to spend the same amount of money. So you may not need to do that. And if you've got questions, of course I'm going to put it out. I see some stuff popping up in the chat box. You can go ahead and put the questions there, and I will come back to those questions kind of here at the end. Effects on loan forgiveness. More time, less pressure to meet the requirements, longer time frame to apply for forgiveness. The rule right now is that you've got 10 months from the last day of your covered period or your alternate covered period to apply for forgiveness. That, of course, is going to be, with the bank that you got the loan from, and other than the original forgiveness application, which is now useless because they've changed these rules, we've not seen any bank come out with their requirements. So the SBA is going to issue their application. The banks can go do their own thing to collect similar or even more information based on what the bank feels their responsibility is. So we'll be dealing with each bank individually on what their requirements are. I'm going to point out here that the new act also allows for a longer repayment term of up to 5 years if two things: if the lender and borrower agree. And I've also seen some commentary, not governmental commentary, but commentary from some other articles that I've been reading on the topic that says that if you were part of your original, if you got your PPP loan, before the date of this act, that wouldn't necessarily apply. So I'm not sure how that's going to roll out. The original term was 24-month repayment of the amount not forgiven at a 1% interest rate. I don't know that the banks are going to want to carry that on their books for any more than they're required to. So I'm not sure they're going to really want to go to 5 years, but I think we'll see what that looks like based on, it's got to be, the banks have to agree to extend the term apparently. So I'm not sure how that'll work out, but we'll see. So the original bill, and this was an early problem. The original bill reads that if you were under the 60%, used for payroll costs, there would be no forgiveness. The SBA and the Treasury and some of the congressional leaders that were involved in drafting the bill have come out and clarified and said that no, the sliding scale will still be in place, and there is no cliff, so that if you don't spend at least 60% for payroll costs, it doesn't mean you get zero forgiveness. It means that, again, you might end up paying some back based on what the amounts show. So, I pointed out that there's still a lot of unknown information here, and there's a lot of remaining questions. One being, does the limit on owner compensation increase? The original forgiveness application says that the maximum amount of compensation paid to an owner during that 8-week period that would be allowed to be forgiven is $15,385, which works out to be, $100,000 a year annualized for 8 weeks. If we change that to be 24 weeks, then the amount should increase to this $46,000 amount. But we haven't seen the application. There's the new application for forgiveness. So I'm assuming that is going to be the case, but that's an assumption at this point. And it seems fair and it seems reasonable. This is governmental stuff and not everything is fair and reasonable. So we hope that that's the case. What is the tax effect on loan proceeds used in 2020 but forgiven in 2021? So let's say you use the 24-week period of time and you apply for forgiveness, late 2020, and it's not forgiven until 2021. Well, that's a question. Right now, the guidance, at least from the accounting experts or our RAI CPA, which is our national organization, they're telling the CPAs that you should be reporting this PPP loan as a liability, and only when it's forgiven do you change it. And the way that all this stuff originally read was that the amounts put this right. If you got PPP loan and you used it to pay business expenses like payroll and rent, you can't deduct those amounts because it wasn't your money. So whether we call that forgiveness amount another income line, or whether we reduce those individual expenses, we're not yet sure how that's going to work out. But it does make some differences, and it could very well be a difference if you have to, if the actual forgiveness date happens next year, it could be income or reduction of expenses next year. So I'm not sure how that's going to work, and I think for most folks, getting it forgiven in 2020 would be the better thing, because chances are your income is going to be less in 2020. It's when these payroll costs were paid. It makes sense it would probably be a lot better in 2020 than 2021, but I'm just pointing out that there's a question related to how that's going to work. What will the new forgiveness application look like? What are they going to require for backup? What other things are they going to want to see? And again, SBA and Treasury will release a new application, and the banks are going to take it a step further and make it their own. Certainly there's going to be some other problems that appear with these new rules and how they're being applied. And you never know. There may be some additional guidance, or there may be some additional laws passed, kind of like this one was here, to adjust what was wrong with the original PPP law. When will banks start accepting forgiveness applications? So it's very possible that could happen end of this month or early next month. If you've got if you've decided to stay with your 8-week time frame and you've got 10 weeks after the end of your covered period to apply, that would be, this summer. Will lenders agree to a 5-year repayment term? We don't know. Should you stay with an 8-week covered period or use the 24-week covered period? And I think that's, so one thing that's kind of popped up as a problem is, for most small businesses, with some exceptions, there's a new, what we call QBI deduction. The QBI deduction is something that came out in 2017. It was passed in 2017, and it started in 2018. So we've used it in 2018 and 2019, and that is a 20% deduction for small businesses of their profit, basically. But it's limited, and it's limited based on certain things, which includes payroll. So what is the effect going to be if you have forgiveness of a PPP loan that reduces your payroll cost? Could that hurt you with the QBI deduction? And in that case, moving it to a 24-week covered period and only using 60% of the PPP for your payroll cost instead of the 8 weeks at 75% might leave you with more payroll costs, which in turn may, in some cases, get you a higher QBI deduction. I will just say that, this stuff is fairly complicated and it's individualized, and if you've got questions about how this stuff is going to interplay, I would suggest you just give us a call. And in a lot of cases it won't matter, but there are some cases where the payroll levels matter when it comes back to using this QBI. And I think if you've got the PPP loan from the end of your covered period with an application deadline of about 10 weeks, there's some time to look at it and to decide whether it'd be better to wait and do it based on a 24-week period instead of the 8-week period. So this presentation was really designed to be pretty short, just to run through some of these questions and some of the issues of the new laws. So I'm going to go ahead and say if you've got any questions, and I see I've got a bunch here, so give me just a second here to kind of go back through them here. So I've got a question here about transferring money to savings in case you need to pay some of it back. It appears to us that they're going to be looking on these forgiveness applications for proof of payroll. They're going to be looking for proof of rent paid and maybe copies of the lease showing what your rent is going to be and your utility bills and this and that. It doesn't appear that they're going to want to see a direct connection between your PPP funds and those payments. So if you want to put some of it aside to, if you think that you might need to be repaying some of that's fine. Does the 8-week period cover from the day we get the PPP deposit in the bank? So it's the date that you receive the funds, or what they're calling the alternate covered period, which would be based on what the payroll is. So the alternate covered period is really designed to, if you got your money on a Monday but your payroll doesn't happen till Friday, to allow you to start your covered period on that first payroll. So, but it's 8 weeks from either that receipt of the money or the first payroll that you have to pay. If you decide to do this with the original 8 weeks, how you know if the loan would be forgiven? What is the process? So I think it would probably be safe to look at the existing loan forgiveness application to judge, what that looks like. I think that's probably going to be a fair use of that. And really, it's just a matter of if you're, some cases, and I think, us, here in our office, it's very likely that we're going to go ahead and just do the 8-week period so we can get in early into the forgiveness application and be done with it. And I think, in our case, we're using more than 75% of it for payroll, and it's not going to be that terribly complicated for us to put the payroll records together and show all that in an 8-week period. So right now, even though we have the SBA's original forgiveness application, our bank is Dan, I think you're using the same bank. The bank hasn't released any information on how to apply for forgiveness yet, and I think that's one of those things we're going to wait for. And if it's very possible the banks are waiting for the SBA to release their new application based on the new rules, so I think it might be a few more weeks anyway. Is vacation time covered for an employee? Yeah, all pretty much most payroll related costs. So sick time, vacation time, bonuses. There are limits, and you can't have any one pay period where you're paying more than 100,000 annualized, which works out to be $19.23 a week. So is the amount per employee still $15,385? Yeah, Block. That's a great question. I would think it would be based on, it would be the 40, what was my number, 42, 24 weeks instead of 8 weeks. So it should be 40, I'm thinking it's going to be $46,000, but that's, that number came out, that hard 15,385 number came out on the original SBA forgiveness application. So I would think that we might need to wait for that next forgiveness application to be 100% sure that that is the case. But I would believe that that would need to be the case if they're going to let you use 24 weeks. How is the 60% calculated if there's a lot of supply, debt, or credit card? Can I pay them? So yeah, the 60% is payroll cost, so it's gross payroll plus owner provided health insurance and owner paid retirement plan contributions. So supply bills, general costs of operations are not included in the 60%. The 40% is rent and utilities. So nowhere in any of this can you pay supply bills, office supplies, cost of sales, inventory, or any of that stuff. All that stuff is excluded. This is strictly payroll and rent and utilities that work into the 60% and the 40%. What is the extent of the amount forgivable to sole proprietors? And the question is, 24 weeks divided by 52 times 2019. That would be, so what she's saying here is, if the 2019 for sole proprietor, so if a 2019 Schedule C shows a $50,000 profit, taking that $50,000, dividing it by 52 weeks, and then times 24 weeks should be the amount that they'll allow for forgiveness. And I would agree with that calculation, with the caveat of, based on what I know and what they're telling us this process should look like. Now, it's certainly possible that something, they've been really bad so far about telling us how to handle self-employed, sole proprietors. There's been very little, even the original application for forgiveness, I thought, did a really poor job of clearly telling a self-employed person how to apply. So it's also very possible that they come out with a very low level and say, hey, if it's under $10,000 or $15,000 or under $50,000, we're not going to spend a whole lot of time on it. So just show us your filed 2019 return with your Schedule C, and if your loan fits within that 24 out of 52 week thing, that we'll just forgive it. I mean, that's very possible. I think it's going to depend on how the banks feel, what their risk in doing that kind of thing are, and what the SBA is telling them. So What's my opinion on taking the SBA EIDL? So real quick, the EIDL, the Economic Injury Disaster Loan, when you apply for the EIDL, they had a very simple early application that allowed you to get what they were calling a grant up to 10,000, which then turned into 1,000 per employee. So a lot of, if you did that application, you got money from that original, EIDL amount. They're now sending out emails asking you to finish your application to take the bigger EIDL loan, which is a much larger amount. Our original guidance was we didn't like the EIDL loan. It's a loan. It's not forgivable. It's completely repayable. And if our understanding, particularly of the original, and it's possible that it's changed, but the original loans were going to be, if it was more than a very nominal amount of money, they were requiring you to provide, some financial backup. So they were asking for liens on your house and that kind of stuff. And I not a big fan of that. Certainly, I'd rather, and we have always said, be very careful running yourself into a bunch of debt, in order to maintain your business and pay your employees. I understand the desire to do that, but you got to be careful not to run yourself and put yourself out of business while you're trying to support your employees. So now that the PPP loans are out, again, I'm not a big fan of that type of loan. And I don't know. I've got a couple people who have applied. I think we've got one or two that have maybe received the EIDL, and how all that kind of plays in with the PPP loans is a little bit more complicated. But the EIDL is fully repayable. It is a loan. You cannot have it forgiven like the PPP. I'll give an example of covered period. Got money May 5th, but payroll ended May 2nd. Was paid May 9th. So the covered period would start the 9th and run from there. It would be my understanding of how that's supposed to work. Yes, owner salary can be included in the payroll calculations, limited to what your owner salary amounts were in 2019, and then with an upper cap of, we're hoping it's $46,000 based on a 24-week period. But that's, I think I've covered that here a little bit. So regarding proof of payroll, S Corp doesn't use a payroll company or QuickBooks, but so the question is, and we've run into this a little bit, if you're an S Corp, your payroll costs are the wages you pay, and it shows up on your W-2. If you're an S Corp and you're not doing payroll, then you have no payroll costs. Your profits from your S Corp that are going to your K-1 and to your personal return are not considered payroll. So they're looking for payroll. They're looking for the stuff you're paying Social Security, Medicare on. And if you're not paying Social Security, Medicare, and you didn't in 2019 and you didn't in the first part of 2020, then you do not have payroll costs, and you wouldn't be approved for a PPP loan. I say that, but I've seen it. So, I have someone who convinced the bank to send the money, and they're going to be, we're doing some things with payroll to try to help them out for this year. But I think it would be, they've already done it, they'd already received the money, and now we're trying to make sure that it gets forgiven. And we've pointed out that it may be something that doesn't work out, but we're going to give it a try. So as a sole LLC 1099, and we overpaid ourselves since no payroll. I'm not sure I understand that question. But if you're a sole LLC getting a 1099 and running it through a Schedule C on your personal tax return, it's it's line 31 on the Schedule C, which is the bottom line profit. That's the number that they're going to use to determine for 2019 whether you can get a PPP loan. So if you ran a bunch of expenses through and really knocked down your profit and your profit turned into a loss, or if you've got a loss on your business Schedule C, and we've got a few of those, then no, you can't get a PPP loan based on that. Wayne, I'm not sure I understand your question. It's, well, got approved, but didn't want to sign personal guarantee. Yeah. Yeah. So if you've applied for the EIDL and they've approved you for an amount and they're asking for a personal guarantee, and the business is struggling, that's a great question to ask yourself. Do you feel comfortable signing that and having a personal guarantee in order to dump that money into a business that's struggling? You could do that, not survive, and only have to then pay it back personally, if it didn't work out. So I'm very cautious with that. If in 8 weeks the payroll adds up to more than the loan amount, is it forgiven? Generally, yes, with the understanding that if you've overpaid yourself, it could cause a problem. But it just for argument's sake, if you got the PPP loan amount based on payroll in 2019, but in 2020 during your covered period you actually have higher payroll costs, you've got maybe some more people or maybe higher wages below the thresholds, then yes, you can use 100% for payroll costs and none of it for the non-payroll costs. You just can't do it the other way around. So it's for the, whether you use a 75-25 split or the 60-40 split, it's 60% or more of payroll costs and up to 40% for non. So you're allowed to use all of it for payroll. You just can't use any more of it for the non-payroll. So so there's a question about the stimulus checks, and yeah, they're a lot of people have received their $1,200 per person in the family stimulus check. I am very well aware of a number of very upset people who have not received their stimulus checks. And if you go to the IRS website and you look for your stimulus check, if you haven't filed 2019 or if you've recently filed 2019, you got to base it on 2018. Look at your tax return. The address that they ask for is extremely delicate. It has got to match exactly what is on the tax return. So if it says 15th Street spelled out and you put 15th ST, it is not going to match. So we've seen a couple of instances where people have moved and now the check's floating around out there in the middle of nowhere. And unfortunately, the way the IRS is right now, they're just starting to bring people back into their offices to work. I mean, they're big organizations with a lot of people working in very close quarters, and they've been working, some of them remotely, but they don't have that access for most. And given the nature of the information and the secrecy and problems that they have with giving employees just unfettered access to our tax records and social security numbers and that kind of stuff, they don't really want to do that too much. So it's been pretty restricted, and we are aware of a lot of things that have been filed. We're waiting on a refund for someone for something filed back in early February, and there's nowhere to call. There's no way to follow up on it. It really is just a waiting game, unfortunately. And I saw an article this last week that says there's like 10 million pieces of mail sitting in cargo containers at the IRS various facilities waiting for their people to come back and to start opening them. So pretty much anything that we've mailed out in the last 2 to 3 months is sitting in a pile somewhere. That's great. So If your business manager, let's see if I get this question right. If your business manager is salary more than what they were making in 2019 to encourage them to work during pandemic, is that covered? Yes, it is. It is, as long as you don't cross any. The $1,923 per week number is $100,000, which is the cap, divided by 52 weeks. So if you're paying bonuses, you just have to be careful not to cross that 1923 line. So we've got some bonuses that we're paying, and instead of writing one check for bonus, I spread it out over 8 weeks so that nobody crosses that line. And specifically because if I paid it all at once, most of it would get excluded. If I pay it over 8 weeks and I keep it always under that 1923, then I get to include all of it in our number. So yes, that's not a problem to pay those kinds of bonuses. So here's a question of a small business that had 23 employees before they were forced to close, now only have 13 or so who've been willing to come back, and they're concerned that the PPP won't be forgiven. So per the exceptions, I think there's 3 different issues, or really 2. One is, are you closed, or are you not running at full capacity because of government restriction, like you're not allowed to have more than 50% of occupancy, so you can't bring back 100% of your employees because you're only allowed to have 50% opening, or you're allowed to be open and business has fallen off, so you don't bring them back or they won't come back. So one of the original exceptions was that if you make and document your desire to bring them back and the refusal to come back, then you shouldn't be penalized. But we're seeing some of that. We're seeing, unfortunately, it's not necessarily because people are scared to come back. A lot of times, particularly at the lower income, the lower pay levels, they're getting, up to, 200, I think it's up to $275 from the state of Florida for unemployment, and an extra $600 a week on top of that from the federal government because of the stimulus. But that's going to end next month. And any of those folks who decided they didn't want to come back and work because they could sit at home and do nothing are going to be in for a shock. A whole lot of those people all of a sudden scrambling to find jobs for when their employers have replaced them with people who want to work. So the answer is not running full capacity because of government restrictions, and the new exception says that shouldn't hurt you. So I think you're going to want to document the restrictions. So maybe go to I know the county and the city here in our area are regularly putting on their website what the restrictions are. So maybe documenting and making sure you've printed those things out and have them for your file that says, up until this point it was only 25%, and then from this point to this point it was 50%, and so we've matched our employee level with the level that the government says we're allowed to be open. And I think that would be the way to kind of document that. What the forgiveness application will actually ask for to document that, I don't know yet, because those were new and they weren't on the original application. So okay, so I got a long one here, Vince. I'll make a note and I'll email you directly, and we'll try to figure that out for you. So it's a little bit more complicated than I want to get into. Veronica wants to know, how come the IRS sends some people's stimulus money via debit card? Yeah, I don't know. I've got people who are on Social Security who should have had direct deposited money the first week who still don't have their money. And I've seen we've received checks and seen checks issued to people who are dead. And it says right on the check, their name, deceased. So the IRS knows that they're deceased because they put deceased next to their name, and they still issued stimulus checks to them. So I'll give the IRS and the Treasury Department a little bit of credit here. They mobilized really fast, and they spent a lot of money really fast because they were, Congress passed the law, the president signed it and said, make it happen. So when you're dispersing and dealing with as many people, there's over 300 million people in this country. To get checks to 300 million people, or however many checks they issued, is a monumental task. And I suppose I'm probably surprised that it's gone as smooth as it has, while also having a lot of your operation being shut down due to the coronavirus and not being able to have full capacity. So I think I said earlier in some of our webinars, there was one guy left back at the IRS who was trying to figure out how to program the system to do this, and hit go and watch it print. But it's been complicated for them, and I think there's some people out there who will have trouble. It's just going to happen. There's going to be people who moved and the check went to the wrong address, or there's going to be people whose bank account changed and the IRS tries to direct deposit into a closed account. They've got procedures to work through that, but those exceptions take time, and it takes people to override those exceptions, and the people aren't necessarily in their jobs right now. And I think it's going to be a while before some of those folks do get those stimulus checks. But I'll point out that the stimulus checks are a 2020 stimulus that was, sent out in advance of the 2020, tax year. So if you don't get it based on your 18 or 19 tax return and you still qualify when you file 2020, or if you didn't qualify for 18, 19 and you now qualify when you file 2020, you will get it when you file your 2020 tax return. So anyway, yeah, so someone says for loans small as 50 or 60,000, this person's heard they won't even contact us for repayment. I think that's very possible that they come out and say, there's so much of this, we're not going to chase down little amounts. They have said if it's more than $2 million that they're going to audit it, and that's going to be a ton. But I don't have anybody that's got a $2 million PPP loan, so I'm not worried about that. I think what we're going to have to hear, my suggestion, of course, would be to apply, because you've only got 10 weeks from the end of your covered period to apply for the forgiveness. So I think it's going to be a matter of needing to apply with the bank for forgiveness. And if the bank decides they don't want to request a bunch of information, or they're just going to rubber stamp it, then that's fine. But you don't want to assume that that it's just going to be forgiven and don't follow through, because 2 years later when they show up wanting your payment, then you've got a problem and the period's closed. So don't just pass on that. Keep an eye on the clock. Keep watching emails and communications from your bank. We get a fair number of those just because people pass them on to us. So I've seen the SunTrust and BB&T, which is now Truist. I've seen emails from them saying hey, it's coming. Keep an eye out for it. They're letting us know when things change, and that that may delay it a little bit. I've seen stuff from Bank United as well. Keeping us apprised of what's going on with their process. So I expect most of these banks to open the portal. Both Truist and Bank United use the same kind of portal vendor to handle all the application and the documentation they wanted for the application. I expect them to use those same logins for the forgiveness. Will they? I don't know, but it seems like they built that system. Your information's already there. You've already got a login. See if anybody remembers what their login was, but I think they'll allow you to probably provide that supporting information and application there. And then and you're selling your business. Okay, well, that's great. I would well, I think if you're selling your business July 31st, it's very possible that you're not going to be able to go for the full 24 weeks. If you can make it work in 8, I'd suggest you try to get that application in, as soon as possible, and check with your bank and see if they, be on the front end of that with them and try to get this thing closed out. You don't want to, you certainly don't want that dragging into next year. And I doubt your buyer is going to be interested in taking on the responsibility of your current year PPP loan. So if you've received the 8-week term and you want to extend to 24, is there an application process for the extension? I don't believe so. I think that's going to be based on, I would imagine that the forgiveness application will ask you to check a box that says I'm using 8 weeks or I'm using 24, ask for the date of your loan, and of course if it's before the date of this new act here, then you would qualify, and I would imagine that's probably it. I'm not hearing there's a separate application. It's more of an election, so I would think it would be on your on the forgiveness application. So, all right, everybody, we've been on now for not quite an hour, but about 45 minutes or so. So it looks like I've gotten most of my questions answered. Of course, with the exception of one person who I've mentioned, I'll get back to him to get some more details and see if I can lead him in the right direction. We're always available. If you have any questions, shoot us an email, give us a call. We're dealing a lot with these things. From the very beginning, we were involved in a lot of the applications, and now we're certainly, because in a lot of cases, we've got clients that have us handling their back end accounting. We do real time accounting and tax projections and tax planning for our business clients, and a lot of people are in our agreements, what we call our fixed price agreements for those services. And for them, we've got access to their payroll records and we've got access to their accounting records, and they're up to date. And it'll be, while it'll be easy to put together the documentation, some of the planning relating to this with all the changes has been a little challenging, but we've managed to stay on it, and Jesse here in our office has done a good job of keeping up with that. For clients that have lots of employees, and we're trying to manage full-time equivalent hours and make sure everybody gets their best, full forgiveness is what we really want to do. We want to use the money to help your business and let it be, let you, keep the good free government money. The other way to get free government money is to engage in tax planning and get your taxes down and pay them less. So we do a lot of that, and of course we're always looking to help business owners. So if you need some help, give us a call. If you've got some friends that are struggling or are having a great year and they're making a bunch of money, we can help those folks try to get their tax bills down. So I appreciate your time. I hope you found this very valuable, and look forward to doing this again real soon. All right. You all have a great afternoon. Thank you.